Hello friends, welcome to my channel AFS. As promised in the last video, today we are going to talk about what factors should a retail investor consider before investing in an IPO. So let's talk. Generally when I speak to my friends, relatives or colleagues and ask them why they have invested in a particular IPO, 85% of the time I get an answer that they have done so because they have heard their friend do the same, or some of their relatives have advised them, or some of their siblings have done it, and so on. Is this the right way to invest in an IPO? Let's ask this question. So when we buy a piece of shirt, we check the brand, we check the make, we check what textile has been used, what material has been used, the cut, the fit, and multiple other parameters that we see. So then why, by making such a vital decision of investment, we just base our decision on an hearsay? Let's consider today what are the factors we should always look at before taking a wise investment decision. So let's consider the first factor that we should keep in mind. We should always understand the business model of the company. What do we mean by business model? In simple terms, how does the company makes money? So sorry for dramatizing it. But guys, we need to understand how does company generate its operating cash flows? What products do the company sell? And how does it records revenue or its top line? Let's take an example. An automobile company will record revenue when it will sell cars either to its dealers or customers. In similar fashion, we should understand the business model of the company which is coming for an IPO very thoroughly. Investment gurus have largely said for retail investors that we should not venture in out for a company whose business model we do not understand. We should always operate within the circle of competence. That is, always invest in a business that we understand, or else refrain from investing. Friends, the second most important factor that we need to consider before investing in an IPO is to understand the future prospects about the industry. Now let's talk about how do we understand the future prospects. As we know, the company's valuation depends upon the projected future cash flows of the company, which is then discounted to the present value by using an appropriate discount rate. So, how do we know what are the projected future cash flows for a company which has come in for an IPO? It's not a simple task, but is it figure-outable? Yes, as Marie Forleo, the best-selling author, says, everything is figure-outable. So let's understand. When we talk about an industry's future prospects, we generally look at what is the nature of an industry. Is it a capital-intensive industry or is it not? Is the industry more saturated or concentrated? Does it have room enough that other players can be accommodated? What are the demand-supply dynamics for that industry? And multiple factors. So how do you as a retail investor go about finding this? Simple. Read the industry body reports. So there are different industry body reports like CM or many other industry bodies which release the reports on the industry prospects and what is the kind of competition currently in the industry. You can also read some of the freely available reports of consulting firms like McKinsey, PwC and many other firms that are available for you to get a better understanding about the industry. The third important thing that you can look at is look at the annual reports of the companies which are already in that area or in that industry. This will provide vital information about the industry prospects. The third important factor is to know the promoters and the management. Now you will have the question in mind, why should we know the promoters and the management? Do you know the famous saying, bet on the jockey, not on the horse? In the similar fashion, we should know who are the people who are going to stir the ship when it is in turbulent times. How do we check this? Simple. Just Google for their companies that they have headed previously. Or you can also check how this company that they are heading, how has it performed in the past. So let's talk about the fourth factor that we need to consider. And that is, compare the financials of the company with the peers in the same industry. What do we compare? Compare the vital ratios like revenue growth numbers, profitability ratios like ROE, ROCE. You can also compare the valuation ratios like PE ratio, PEG ratio, and different other vital ratios like EV by EBITDA and multiple other ratios to understand whether this IPO is fairly valued. It has been observed multiple times that the already existing players are fairly valued as compared to the IPO pricing. So then why not invest in a company that we already know and is listed than to go in for an IPO? The fifth most important point is to look for market sentiments. Generally in the bull run, that is when the market is moving up, IPOs do fairly well. But is this a guarantee? In market there is no guarantee. As we see, the current IRFC's IPO was listed at a discount to its issue price. So there is no guarantee, but generally when the market is upbeat, IPOs generally tend to do well. So let's move on to the point number 6. The point number 6 is know yourself. Now what do I mean by know yourself? Understand your risk profile and the intent. Many people invest in an IPO just for the listing gains. So are you in there for just listing gains or are you a long-term investor? Friends, it is very sad to know sometimes that retail investors do borrow funds to invest in an IPO. Please remember, if you do this, you increase your odds. Why do I say that? Because on one hand, you have fixed cash outflows in the form of interest payments, and on the other hand, you do not know whether the stock will list at a premium or a discount and how long you will have to wait to recover your money. So never fall into that debt trap. So friends, I hope now you have understood what factors you have to keep in mind while deciding the IPO investment. If after doing all these efforts, you do not get allotted any shares in an IPO, please don't curse me. Instead, bless me. Why do I say that? Because by learning this process and applying it, you have learnt an investment philosophy which will give you peace of mind and preserve your wealth. So thank you so much for watching. Keep safe. Thank you.